Hello, everyone. This is JJ Richa, and I see a cat behind Xandra.
I
So, welcome to today's
know. Get
show.
in here.
That's actually really cool. I have Xandra Laskowski with me today. You have time to take her off if you want to, but
Yeah,
she's
I gonna do.
that's
I
fine.
was like, what are you
And
doing?
Xandra is the founder and CEO of OSea Angels. And so she's going to introduce herself in a little bit.
Yes,
But
yes.
before she does that,
Okay.
let me
Cat
tell you
wrangle.
just a little bit about the program for today. So that's a cool surprise there behind you. So
Wait a minute, I have another cat.
our program for today is basically a fireside chat with Sandra, just to talk about really what's happening. I know you probably all are tired of listening to, what's happening with the COVID-19, how it's affecting everything. But today the discussion is specifically about how can startups live and understand how to deal with the COVID-19 as a startup. So
Right.
the we'll talk about that in a little bit later. It's going to be about an hour for the show today. What we're going to do is we're going to open it up from the first minute to everyone to just ask any questions that they may have. So please do so at any time. Uh, this program we've been doing for a few months, and it's basically a way for us to reach out to entrepreneurs, to startups, and help them understand really what it takes to build a business, what it takes to raise capital, what it takes to really learn what investors want and VCs want, and also things like what we're doing today. How do you deal with a pandemic like this as a startup? And so it's important for everyone to understand all these different uh, details about what it takes to raise capital and build a business, because that at the end of the day, that's what investors are looking for. Also, so again, what I want to say is if you have any questions, please put them on right now. If we can't get to one of your questions, you can always email it to pvinfo@pismoventures.com, and I will forward it to Zandra. Um, just a little bit about what we do here at Pismo Ventures. So this is what we do. So we're a venture studio. So basically, we are a venture firm and an accelerator. Also, we have a software development arm. So what we do is we help businesses with their business needs to build the right business based on whatever problem they're trying to solve in the marketplace. We also invest resources and cash, which means service in lieu of equity, in addition to cash, into our portfolio companies. We also help develop software. Although we're agnostic, we can develop software as well if that's what they need. We facilitate funding, and we do this because if we have skin in the game, we want to make sure that you succeed. We also help open doors, meaning if we can connect you with customers, clients, we're going to do that as well. We also are building a fund this year, and so it may not be this year, but now it's looking like it may be early next year because of everybody knows what's happening, and we're talking about the COVID this time of the year.
Mhm.
We also are a hybrid cash and equity model, so we're very startup friendly. We engage on a month-to-month basis and no long-term contracts, and we become truly partners and investors with our portfolio companies. The other thing I want to tell everyone today is about a venture plan competition that we're launching. So we launched this on Thursday of last week. So it's a business plan competition for startups. These are pre-seed through Series A. So regardless if you're in revenue or not, there's a lot of things that this startup provides. We have as of today, more than 110 investors that have committed their time to actually judge the competition. We also have tons of webinars and workshops that are available to learn. If you win part of 10 categories that we have, you will win some cash prizes, some in-kind prizes. You can see it on the website. Also, the biggest prize or the grand prize is really the ability for the winners and potentially for others also to be able to go and pitch to 32 plus angel groups that have agreed to listen and provide the winners with the ability to present to them, which is an absolutely amazing opportunity for anyone to be able to present to so many groups, all that have committed their time to allow you to present to them, potentially raising capital from each one of them. So the website is ventureplancompetition.com. I'll put it in the chat in a few minutes. All right, so I think that's enough for today on that. Hello, Xandra. How are you?
Hi, I'm doing great. Thank you for having me today.
Thank
JJ.
you. So just tell us a little bit about yourself.
Sure. Well, I've been I'm an angel investor. I've been doing it since 2013, but I'll back up a little bit. We started our own family office in 2008, so I've been managing those assets since then. In 2013, I started angel investing with my first few investments. Got hooked, loved it. And then I started OSea Angel Investors, which is a women's angel investment group. We're based at the UCI Cove. And our mission is to educate, connect, and inspire women to learn more about angel investing. So I'm also a member of Tech Coast Angels. I'm a member of Titan Angels. I'm in their fund out of Cal State Fullerton, and I'm an investor in the Cove Fund, which is a venture capital fund based at the UCI Cove. So I'm kind of covering all my bases with diversification with my startup dollars. I have over 30 companies in my portfolio at the moment, and a few, they're actually all doing very well. I only have one or two that are kind of on the ropes since COVID.
That's awesome.
So we're very fortunate, but you know, I have an investment thesis that I use. It's my personal investment thesis that I use for OSea Angels. And one of the metrics, one of the pieces is that the companies have to have at least a year of capital before I even invest in them in the bank to support the current burn, because they will fail. If they're in the, you know, a couple months out, you know, in a good year, it's risky. So that's one thing I look to make sure that they have the capital and they're in recurring revenue.
Well, you know, it seems like you don't have much on your plate, so
No.
Are you getting bored at all?
No, I've been, you know, it's since COVID. So when COVID hit, and I'm sure you've heard this over and over in the past few months, everyone took a pause. You know, venture capital angels took a pause because we just really wanted to check in with each other, kind of figure out what is happening here, what's going on. Is this a short-term thing? We now realize it's going to be a long-term thing, and negotiating valuations actually is a lot easier for different kinds of sectors that a startup is in. It's harder for others, like food and beverage and consumer goods, depending on where you're at. So we all took a pause. But then I queried my members in OSea, and I said, look, you know, do you want to start seeing deals again? And it was a resounding yes. So we started having companies pitch to us in May and June, and 2 of the companies have already received funding from our group. So the dollars are there, the appetite is there. If you have a solution in the sectors that are going to be benefiting and are benefiting right now from our new normal.
Yeah, that's really, really cool. So before I start asking you questions, I'm going to remind everyone again to ask questions anytime. Also, I forgot to mention that subscribe to our YouTube channel and follow us on social media, because it is important to keep getting the information that we provide to the community. We're going to talk about COVID-19, but I really think it's important that you talk about the different criteria that you have for OSea Angel, because I think it's really important for everyone to hear that.
Absolutely. So this list was, and I encourage my angel investors to come up with their own investment thesis based on what they see and how they learn things. This thesis came together with my successes and my failures. So in no particular order, the number one thing we look at is the problem you're solving. Do you have, in a business sector that is growing and has growth potential, and what's your differentiator? You have to have a high barrier to entry. Now, consumer goods and B2B, B2C, sometimes there isn't a differentiator because there's so many SaaS tools out there and there's so many. Right. So we look at maybe first to market. Are you first to market? Are you building the momentum in that market, in that space? And is there enough room for you to grow? So that's one of the top things we look at. And then we take a look at the business model. You know, is it capital intensive? SaaS tools seem to be the simpler, sexier thing that a lot of VCs and angels are looking at right now. But then there's a company like Smart Armor, and they have a patent portfolio. They make a device. This is one of my portfolio companies. They make a device that locks cabinets and things inside of your house remotely. So we do our remote locking of our home from the outside. It takes you inside. But the secret sauce with this company is their patent portfolio, which is around drone delivery technology. And guess who they have to partner with? They have to partner with UPS, or UPS has to partner with them, and so does Amazon, because they are having these patents, approved. So it just depends on the business model. So that's very important.
They're going to buy them out, right?
Yep. So the business model, you have to have a proven business model, proven go-to market, and you're in recurring revenue. So that's another metric we look at. The team, the leadership has to have relevant industry background. The founder has to have built, scaled, or sold a company, or you will fail. And people say, Xandra, we have so many great young people starting companies. That's fine. That's good. I just want to make sure there's someone on your team that works with you on a daily basis who has built, scaled, and sold a company.
Who has done it before.
Has done it before. You're going to have a hiccup. You're going to have an oh crap. You're going to have an oh. And so what we find is the communication with your team and the communication with the investors. That's a new concept to these newer founders. So if you have someone seasoned on your team, they're going to know exactly what to do. Let's go ask the investors. Let's go ask our board. Let's put our board together thoughtfully, the right people that have the reach and strategic alliances. So the team is very, very important. Are they coachable? How do they act, react when things happen? Are they really communicating with the investors? That's so important, because that's where I think we're seeing the successes with my companies, my portfolio. We have consistent communication. So we always know what's happening, and they reach out and they ask for help when they need it. There's a portfolio company called Ready Set Food that we invested in, and they make a formulation that you introduce the allergen to the infant at 1.5 months old. It's a little powder you put in their milk. Yeah. That company they're hitting on all cylinders, but they communicate. We need strategic introduction to hospitals. We need strategic introduction to payers. So I love Daniel Laskowski and what he's built with that company. So that's important, the team. Number 4, another metric we look at. We want to make sure we look at the cap table. And that really tells us, number 1, who's investing. Number 1, what have the founders invested? Because believe it or not, there's some companies where the founders haven't invested, and I'm not going to look at that company because they don't have skin in the game. Right. And of course, maybe they don't have deep pockets, but they've put as much as they could in to have skin in the game.
That's all that
and then
matters,
I want to see,
really.
I want to see, who's on the cap table and are they strategically, not giving the company away, because that's another thing we sometimes see is they didn't realize how much cash they needed. They go for subsequent rounds before they even go for a Series A, and then all their equity's gone. Well, I don't want to be investing in that team. So we really look at the cap table. That's important.
See, it's really, there's some art, some science, and I agree with you, because there's some people that if someone has less than 10%, for example, why would you invest? Because they don't have that much to gain. It's not going to happen.
They don't.
Yeah.
It's not. Yeah. So the cap table is really important.
Yeah.
Which leads me into my next metric, which is a lead investor. We have to have a lead investor that I know, or that someone that trusted knows has already invested, either an angel group, an angel, or a VC. That way I can make a couple phone calls, talk to them about the process. What did they do in due diligence? How are they managing the company? What's the upside here? What would you do? So it just makes diligence a lot easier for us. And there's strength in numbers. And as you know, JJ, our community here in Southern California of angels is very tight.
Yep.
So we can just make a few phone calls and we'll hit like 3 or 4 different angels, like the angels you have that will be judging in the venture competition. Like I went through that list and go, I know all these people. This is great. I know practically everyone on it. Exactly. We talk to each other. We share deal flow. So it's very important that I know somebody that has already invested. That's
to tell you the truth, even if you don't know them, you can pick up the phone saying, I'm interested, and they're going to tell you, because they want it to succeed as well. It's really important.
For sure.
Yeah. So that's really great. But you're tough, man. You're a little bit more demanding.
I'm finding these companies, JJ, let me tell you. So, and then another metric, number 6, is the burn rate. They have to have a year of working capital in the bank to support the current burn. That's just, I've invested in companies that didn't have that and they went under pretty quickly. It was bad. So that's one of my metrics. And again, some of my investors have their own venture capital funds, believe it or not, and they'll do pre-seed, they'll do Series A. But we look at seed and we look to bridge to A, where you have all of these metrics are most likely in place.
Right.
And then the last one, an exit. That's trickier depending on the sector, but an exit between like 3 and 7 years. They're already on their way. They're
That's what
making a
happens.
footprint for themselves. They're going to be acquired, or we'd like to have them acquired, with like cash, but that sometimes doesn't happen. So I have to teach my angels about, I had a company that was acquired this year in Q1, but it was over a 3-year period. It was it was a stock switch. They have new stock in the family, in the company that bought them for stock. So we're going to get paid out on a stock basis, as it matures over 3 years. So there's lots of different ways to exit. So, that's another thing that we look at. They're not really early stage. They're right there. They're right before the Series A. So they're really proving their model. Maybe they'll have an exit between 3 to 7 years.
Yeah, that's true. So I have to tell you that, at Pismo Ventures, just like you've been seeing, we see companies and I'm being a little bit facetious, and they say, I came up with an idea on Monday. I quit my job on Wednesday, and can you give me $1 million? And I'll be great. And so I agree with you on the reserves. Unless they have at least 1 year, they're not going to succeed. There's always hiccups. When I first started my first company, I had 2 years of reserves. So
That's good.
If I hadn't done that, I would be in deep trouble.
Right.
But yes, I agree with you. So let's get into maybe the COVID stuff, because I think some of the audience today are looking for maybe learning a little bit more about this. So you talked about communication, and I think that's really important. What do you think? I mean, why should they talk to their board? Why should they communicate with their investors? How is that going to help them in the COVID world?
Well, from my point of view, if you're not communicating with your board and your investors, you're missing out on the whole point of why you brought them on board as an investor. They have number one, they want you to succeed because they have a vested interest in the company succeeding. Number two, they have connections. They have strategic connections that you don't know about. Think about just if you put 5 people in a room from different industries, the connection and the reach those 5 people might have. So that's why the best founders and CEOs are definitely, if not on a monthly basis, quarterly basis minimum, communicating with their investors, and when needed, when a hiccup happens. So I'm going to go back to Ready Set Food. He just sent an email out last week saying, I need an introduction. We're going to market, or we're in market, and we're expanding. I need introductions to hospital groups and to payers. Great. And that went out, and I'm going to be able to make some introductions for him. So we need to know what the problems are. We need to know what the successes are. It doesn't always have to be a problem. Like, we have this strategic opportunity. We're going to start another line of business here. We would like your input on that. Do you have any connection there? So especially through COVID, you're going to want to look at your burn. You're going to look at your capital preservation, and if you need to slim down some things or pivot to something else to take advantage, talk to your investors and your board. They're your team. They want you to succeed.
Okay, so that's a good segue for the next question I had for you. Capital preservation. What does it really mean this is a time where it's testing everybody. It's not normal whatsoever. No. If it stays like this for a while, a lot of people are going to be in trouble, and maybe they already are in trouble because they're really young and they need the market. They need the the customers. They need the networking to build the relationships. How's capital preservation really affect a startup in this world?
Yeah. Right. And it seems like a given. You're always looking at your burn anyway, but now it depends on the business model you have. Like, I have companies that they can't keep up with business because of the solution that they're offering, and they need to look at capital preservation just to make sure they're focusing on those most profitable lines of business. Yeah. So depending on if you're still in growth mode, if you're just staying in the game, or if your sales are declining, you'll have to be looking at, where do we cut costs? You may have to lay off people. You'll have to look at your biggest expenses and work with your team, work with your financial people. What are our big expenses here? Typically it's salaries, but sometimes it's something else. We're going to have to get really efficient on that. Again, speak to your investors. We're going to have to be in self-preservation mode here. And that's the hard part, because you want to fundraise, but you have to have a dynamic story saying, this is where we cut our expenses. we're down to a minimum burn, so we have more capital to play with to live to see the next day. This is where what we feel that the lines of business might be more profitable. We may have to make a small investment. When you're communicating, going back to communicating with your investors, and we know what's happening, we'll be more inclined to say, okay, maybe we can all throw in a little bit money to keep this thing going, so we can survive until the orders come back in, or so the company survive until we get these new lines of business in place that will be more profitable. So looking at everything, talk to your employees, talk to the people that are working for you. Where can we drive efficiencies? They're going to be more of the expert of the marketing or the manufacturing or what you're doing, the platform. Where can we cut costs? It's so important. And the best companies in my portfolio have been doing that. They understand their financials.
Well, that's also very important. So really, they potentially need someone on their team or hire someone to maybe do a cash flow analysis. And projections as well, in order to understand,
Yes.
worst case scenario, how much
Right.
do they need, really, right? If everything goes bad, how much money you need in order to be able to survive the next 6 months to a year. So
right, that's important.
All right, so all right, again, it's a new world. What about customer communication? Should they continue talking to their customers, existing customers?
Yes.
How do they deal with that? Because the customers are asking questions, saying, "Are you going to be around?" Right. They're asking a lot of questions.
So that's why you have to, if you do have a strong customer base, you might see some accounts payable slowing down a little bit. That's okay. It's going to be, that's just going to happen. And so communicate with them, understand, okay, we understand that you want to push out the AP to, 120 days. That's fine. We can work with that. Let's you have to understand what's going on with the customer. Do they still like the product? Are they still going to order? Getting your arms wrapped around that. Hopefully there's some good news there. They say, yes, we still enjoy, your product or tool, what's happening here. We're going to need it, but we may need more time to pay our invoices. So that customer communication is key. I have one company that pivoted. They were in the travel industry. They were basically doing group travel, kind of a SaaS tool. But as we know, travel has changed completely. So she had a year of working capital in the bank, and they pivoted. She went out and actually queried the customers, because she was finding that, I can actually pivot this platform to office managers that need more of a better tool to manage their office and manage everyone there and see the metrics now that they're working from home.
Wow.
So she did a great pivot within 3 months. She was querying, and she was talking to us as investors. She was asking for introductions for these office managers, small to mid-sized businesses, to really interview them and survey them, doing her research to find out what are the best tools. How will you implement them? Simplicity is key here. Everyone got on Zoom. Zoom was around for a long time, but until this happened, no one was really using it. There's WebEx, there's many other tools, but now this is how we conduct business. This is how we talk to each other. Now we're very familiar with it. So she saw that opportunity. She realized the platform had the legs and could support this pivot. So that's a prime example of customer communication.
Well, you know what else? It's a prime example of someone you would invest in next time around,
Yes,
right? Because
yes,
she figured it out. She knows what she figured. Let me pivot. Travel is not happening for a year, 6 months, whatever. But that's
group travel. Group travel. Yeah. So she got all over that really quickly. So I'm very proud of her. And now she just rebranded the company, and it's great. And we're so happy. We're like, yay, whatever we can do. And she's like, introductions. And so it's wonderful. She's using, the capital efficiently. Luckily, it's a SaaS tool, so it's not a huge burn. There's not many employees, but she's all over it. So that's, one key prime example of customer communication.
So that's a very interesting. It's quite a pivot, because it went from group travel to basically management type tools for the office. But what about if someone is continuing in this in whatever they're doing, because they can't pivot that much? Do you think they should potentially maybe provide their customers with incentives to stay with them? Like you said, maybe extend the payment. What else can they do?
Yeah, I mean, just again, surveying them and asking them, is the tool, is it working for you now? If not, what are the enhancements we can make? What are other things you're looking for, regardless of our company, where are your pain points? Where do you need help? And, that's having that consistent communication, consistent dialogue with them. Not every company is going to be able to pivot, unfortunately. That's just what we're seeing. Some aren't going to make it, but that's okay. You started it, you tried, but again, if you're not communicating, your investors aren't going to know, your customers aren't going to know what's happening. And right now it's so crucial.
Yeah. Because there are a lot of companies that I know that what they've done is they give either, if it's a software service, they give them additional months, or they give them a break on maybe startup fees or whatever it is.
Right.
So anything you could do to keep or bring new customers on, I think that helps. Okay, so again, these are somewhat all related, but let's talk about. Well, actually, I do see a question, so let me put that up on the screen. So, are seed investors investing right now?
Yes, yes, we are. In fact, we just funded 2 deals. We had a company called Giving, GVNG, that pitched to us in May, and they received funding from our group. And it's a platform you can create your own 501(c) in 60 seconds. And the gentleman that started the company, he came from that world. He realized it costs tens of thousands of dollars and all this compliance and all this, all this overhead to start a 501(c). And all we want to do is just give money back. We want to be charitable. So the platform's pretty incredible. And he has over 1 million transactions on it, and he hasn't advertised yet. So it's quite remarkable. So
That's
we invested
really cool.
In that.
What's the name of the company?
It's called Giving, GVNG. Dominic Holmes, he's a rock star. He's great. It was the model company for us.
I always wondered why somebody didn't do that, but there you go. Somebody did it.
Well, he had to go to every state attorney general office in the United States. He traveled to all 50 of them because you have to have compliance with every single, federal and state laws. And he got them all within 2 years. He did all this by himself. He self-funded all of this. For 2 years, he was doing that, and he got all of the compliance, and he was able to, put it under the one umbrella. He's partnering with GoDaddy, so you can have a website, your domain, created right there on the web on the portal. He's this GoDaddy, and then he's talking to Goldman Sachs because a lot of these charities have money sitting there that they are not deployed quite yet, so they can put it into ETFs with Goldman Sachs.
That's very interesting.
So he's really thought down the line. So that was one company. And then this year, so in OC, I teach my women about the different sectors that we can invest in, the sectors that VC and angels are looking at. And this year it was esports, e-gaming, and digital healthcare. Well, boy, there's such important sectors now more than ever. Yeah. And so the second company that received funding is a company called Udify. And it's an app that you download. So right now they are launching at university level. So USC, UCSD, Loyola Marymount in LA are all using this tool. So when you onboard and you register for college, you're supposed to download the tool. And what it is you're in your dorm room or you're at home, you're feeling depressed, you're feeling suicidal. These college students really don't know where to go. They feel completely alone. Well, the chatbots in the app will direct you to immediate help, whether it's telemedicine through the app, and it's all private, or someone on campus, the health center or the medical center that's affiliated with the campus. Immediately you can get help. So it's a fantastic tool, and the colleges are paying for it and they love it. It's a SaaS tool. So that's another company that received funding. So yes, we are investing.
So also at TCA, I think we have 4 or 5 companies that we're investing in this week. As well. So, and there's some that are going directly into the fund as well. Are you in the fund at TCA?
I'm not in the fund yet. I just wanted to see what you guys are funding in the beginning. I don't want to have any overlap with Titan or with Cove Fund because I'm in both those funds. Yeah. And so, but if I see things that I like, I'll directly invest as well.
Right. Yeah.
So I'm kind of, across the board with my investment.
Right.
But yeah. Right. And I'm so happy TCA started that fund. That's so great.
Oh yeah. It's been great.
So I might look at the second fund.
Oh, there you go. Yeah. So we're still taking in for this fund. I can't believe it.
Okay.
So
we'll talk later then.
I gotta. I'll tell Jim Pickell. You might be interested. So okay. So talking about all that. Let's talk a little bit about what does it mean? What would it mean for a company to understand what the exposure is? What does that mean?
Well, you should have measures in place to diversify your revenue and accelerate your profitability for sure. And you need to make sure that your financials are in order. Like doing the cash, the cash burn analysis is very important, because depending on where you're at, if you're still growing, if you're staying the same, or if you're declining, that's going to help you map out how are we going to deploy the cash that we have left, or the cash that's coming in, effectively. That's so important, to be really understanding your numbers. And it's surprising to me, it's not surprising, a lot of new founders just don't know that. They realize, okay, I have this initial money I need to launch the company, but they don't think about how they're going to be moving into profitability.
Right.
And if a line of business gets clobbered, or it's declining, that's when you really need to understand your cash analysis, so you can make the right decisions with that cash burn.
Yeah. All right. So maybe that segues into metrics. What kind of metrics should they look at?
Well, they should be.
Is it cash burn? Is it what is it?
Well, it's beyond cash burn. I mean, that's important. That's a given. You should always know what your numbers are month to month. But also understanding, how the onboarding process, how is that working? Retention of a customer. So we've how much does it cost to obtain a customer? What does it look like through the customer, the customer experience, how we onboard our tool, how they're using the product, are we shipping it to them, understanding how that is working, and the retention. Cohort analysis. A lot of SaaS tools use this, and this is from, they clicked on, they looked at it, they looked at it again, it converted into a sale, and are they coming back? So all these metrics, there's tools out there. Google Analytics is one that's pretty inexpensive to use, to really understand that customer retention, that customer experience. So if you're not looking at the metrics, because you could also drive efficiencies, you could save dollars if you're realizing, boy, there's a pain point here from when we receive the order to when it's getting delivered. Why is it taking so long? Why aren't we getting it out there? Depending on what the product is. If it's a SaaS tool because you're making their organization more efficient, really understand, that's back to communication with your customer. How is the onboarding process going? Are the people using it? Udify, for example, they have metrics in place to show that they've downloaded the SaaS tool, that the payers have done it, and that their practitioners have done it, and that the students have done, so they have all these metrics that they look at all the time to make sure that they're getting the help to that student as efficiently as possible.
Yeah. It's there are a lot of metrics, and depending on the industry, if it's software or whatever, there's a completely different metrics. But I agree with you. Understanding at least the basic metrics of customer acquisition cost, lifetime value, conversion rate, all that is really, really important.
And retention,
Retention, exactly. Or attrition rate, right? It's the same thing, right? So, all right, what do you think the projected financial outlook for accelerators, incubator, VCs, angel groups? What do you think their projected financial outlook may be?
Well, all of these entities are flush with capital. They were flush with capital before COVID-19, and in many instances, they have more capital now. I don't know about you, JJ, but I have not seen the VC fund formation in the women and minority diversification lens is through the roof. I'm weekly, I'm speaking to a new fund that's been created, and there's lots of money that want the investors want to thoughtfully invest. I mean, besides, of course, invest in something that could succeed. But now they're really putting a lens on minorities and women. So, but I've also seen another, funds coming up that, are specific 5G technology. So that, I don't think VC has not slowed down. Angel investing has not slowed down. The incubators, the accelerators, they're still looking for great companies and great opportunities. So there has not been a pause button for these entities and the people I'm connected with.
Yeah, I agree with you. Like I told you the other day, I'm going to introduce you to a new fund. It's women only, and I think it would be great to connect with them. So we have questions from Sam. Sam, are you investing in clean tech?
That's not our skill set. So OSea doesn't invest in clean tech, but the entities that I'm invested with do.
Okay. So just want to let you know, one of the categories in the venture plan competition that we opened nationwide has a clean tech category, so you can apply and apply for the clean tech. I did not tell you this, but there are more than 40 investors per judging panel on the competition, so it's absolutely amazing.
That'll be great reach for them, JJ. That'll be great reach for these companies. That's great.
Oh yeah, great reach for anyone. I mean, like I got an email yesterday. Should I apply? Would I win? And I said, I don't know if you're going to win, but how much you're going to learn, I could tell you're going to learn a lot. There's so many webinars, and just the feedback from the investors is already a lot, I think, to learn from. All right, so okay, there's another question here from Jay, and Jay says, should a positive cash flow business seek investment, and why?
I say no. If you can cover your, why would you give away more of the company? If you're already in positive cash flow and you can support your burn, why would you go out and put, for another raise if you don't really need it, because you're just going to be diluting the cap table a little bit more for yourself? So it really depends. I need more information on that to really understand what sector you're in, what the use of funds will be. There's a little bit more I need to know to really answer that effectively.
I agree. I'm going to say, if you're in a restaurant business, yes, go get some money.
Yes, yeah. Right.
But who knows? Yeah, you got to know more. But yeah, if you don't have to give up, if you know your future and you can sustain for at least 6 months, maybe 12 months, then no. But who knows? If you need, if you're in the restaurant business, you probably need it now. So, all right, what are some of the core things, regardless of industry, that you look for in a person presenting an idea or pitching to you?
Yeah, so the pitch deck, I mean, I look at a lot of them. I see a lot of them. I've got 20 to 30 companies hitting me up a week. And the ones that, come through, it's because I look at their pitch deck, and this is every angel investor. Don't give me a summary. Don't give me 20 slides. Give me a concise pitch deck. And the 3 things I'm going to be looking for: the problem you're solving. That's got to be immediate. I don't want a bunch of words on that slide. Here's the problem. Here's the total addressable market. And we are the people solving it. So those are the first 3 things I look at.
And we know how.
If I like what I see, if I like what I see, I'm going to look more. I'm going to look at the financials. I'm going to look at their customers. I'm going to look at what's in that deck. So that has to be concise. I don't want a wordy slide. I'm not going to be able to read it. We're third graders. Pretend we're third graders. We speak English. You speak Martian. I mean, keep it that simple. And then I get an idea and I get a flavor, and I'll call you up and say, let's talk about this. Let me see what you're doing. I'm interested.
All right, very cool. All right, so let me bring in Christy with a question. Okay. And Christy says, how does a women-only fund work? How do you get the info and be invited to the women's investing meetings?
See, this is a question. I've been doing a lot of webinars this summer for entrepreneurs and investors. And unfortunately, when it comes to angel investing, it's very fragmented, right? There's not like one specific place. There's Angel Capital Association that exists, but it doesn't really have all the angel groups that are here in North America in it. But it's a good start. But no one even knows that Angel Capital Association even exists. Right. So until it becomes more mainstream, do your homework. Google angel investors in California, women angel funds, or women only funds. Right. And each one of them has a different thesis. So for example, Chelsea Clinton and Carolyn Cassie, they just launched their brand new fund called Metrodonna. And they're going to be speaking to OSea next week. And I spoke to them. They come from diverse backgrounds. They've worked in banking. They've worked in hedge funds. But it's their mission to invest in education and healthcare. And they are investing at the exact same level that we are at OSea. Their thesis is very similar to ours. And so they're looking for, to bring investors in, to bring limited partners in. So for me, because I've been doing this for, 7 years almost now, I've built my network of angels and VCs and companies and people that I will reach out to. So unfortunately, there's no straight answer for that. But if you want to connect with me after this, I would be happy to show you. There's actually an article that was written by a gentleman a few months ago, and he searched the internet to find women-focused angel groups, women-focused funds, and he put it in this Medium article. And so I pushed that out to all of my friends too. It's a comprehensive list. It's not everybody, because there's, like I said, there's many great new funds.
You gotta start somewhere. Yeah.
But I can share that with you. I can share it with you, and if you want to get in front of the women funds to get funding, or if you want to become an investor in the funds, I can help you out.
Go ahead and share it with me, and I'll push it out to everybody.
I will do that. I'm gonna make a note.
All right, very good. Let's see. We have another question for you here. So, what are some of the characteristics of a successful founder? Again, you've been doing this for 7 years. I've been doing it for 12. I still don't know what that is.
Passion. It has to be the passion, the crazy passion. You understand what it is. You've got resilience. You've got passion. You're open to feedback. Like
Coachability, right?
Coachability. Cheyenne Wright, who is the CEO of this new company that just pivoted, that's what she's been communicating. She's open-minded. She listens. She takes it in. But the passion, you can't be, that can't be, taught.
You can't fake that one either, right?
No. Yeah, no. So Dominic Calms, who started giving, the passion's there. He came from that world. Passion, like I have passion for what I do at OSea. You can't get me to shut up about it. I love it. So it's that passion for that company. And they're going to have a better chance of surviving the rough spots or surviving a pivot, because again, the CEO is going to be creating the culture of the company. That's another very important thing. If the CEO and the CTO are not getting along, run, because that company is not going to succeed. So you're also looking, besides the passion, they're going to be creating a culture that people will want to work in. So, but I think that's important.
So, you know what? We've had many discussions on this at TCA and others that I've dealt with. So, sometimes I do see companies where there's a lot of passion, but they're faking it. But it shows maybe in the next meeting or the third meeting, you can tell they can't keep it up. So the passion, if someone is really passionate, it's going to stay there. You'll see it. All right. So what do you think these characteristics in founders, what are they doing right? And what are they doing wrong? Maybe what is a strategy? Maybe it's an attitude. Maybe what is it?
Okay, they have to be aware of their limitations. Number one, you can't do it all. You can't. You're not going to know. You're not going to be you're not going to know everything. So founders that understand their limitations, that's very important, and you'll know that pretty quickly. And that they're clearly communicating. Can't emphasize that more. And they have to be radically open-minded. That sounds crazy, but they have to be radically open-minded, because you're going to understand that you have those limitations, and you're going to bring the right tools and the right people in place to help you fill those gaps.
Yeah. Really, really good. Let me see if there are any questions. Not yet, but if you have any questions, post them. Otherwise, I'll keep asking my own questions.
Yeah.
So, all right. So, angel investors and VCs are really looking for businesses that can weather the storm, right? So, and maybe that have demonstrated some strategic resilience, like the example you told us about, which is that major pivot. I mean, I'm actually blown away at that example, because it's completely different. So, what are some of the next steps startup founders should plan on doing when it comes to staying resilient and keeping the continuity of their business?
Many of the things we mentioned, making sure they understand their burn rate, making sure that they understand they're driving efficiencies where they can, and they're communicating with their investors and their board, continually doing that. And if you continue to do that, you'll be able to survive, and you might have some information on ways that you can, maybe start another profitable line of business based on what you have now.
So let's talk a little bit about this. Let's talk a little bit about maybe more drastic measures. Like, should someone put things on hold? They have some cash. Things are, let's say they're trying to service restaurants or trying to service the travel industry, and they cannot pivot. Should they go and find a job? Maybe meanwhile, if they can.
If they've uncovered every stone. They've really looked at the numbers, and they realize this thing is not going to survive. I've had companies that have failed well, believe it or not, and these are companies I usually was on the board, or I definitely was invested in, And I've had companies that have failed horribly, just horribly. They just stopped talking to the investors. They cut off all communication. It's horrible. But the ones that failed well, they kept the communication open. We knew because they were talking, so one of them was one of my first investments, allergies. And it was a holistic lozenge for allergies. My kids suffer from horrible allergies, and it worked. Instead of taking Zyrtec or Claritin, it worked. And when I invested, they just finished their third year of business. They did $1.2 million. They had a $1.7 million grant guaranteed from the city that they incorporated in. And they were in profit. Their profitability was really great. They were profitable in revenue. But the problem there, the analysis, we look at why they didn't succeed, is they grew too fast. They had no business being in Walmart. They had no business being in Walgreens. They didn't have any business being in Costco because they're not Q-tips. Like, oh, I know I can get Q-tips at Walmart. They weren't a household name yet. They should have stayed small and organic and built that way. So one of their larger clients refused to pay. And for a startup that's making, and then they had that one of the customers refused to pay. They had huge inventory they were sitting on that they just destroyed or black marketed, or I don't know where it happened. We really needed that inventory back to fulfill their organic orders, right? So, that was, but they failed well in the fact that they were constantly retinkering the burn rate. The burn rate went from $50,000 to $12,000 a month. We were trying, and then we were opening these smaller accounts, and they were ordering again and ordering again and ordering again. We just ran out of capital because we didn't have the inventory. So that's what happened. So that CEO, even though it was a terrible thing, the company went under. I love the product. Maybe one day I'll go buy the formulation. It's still out there because it works. But he failed well because he kept us in the loop, and we were trying everything. I mean, we had weekly meetings. How are the orders coming on board? And he was able to pivot really quickly to get those organic orders on board, but we just didn't have enough capital. We'd have $100 come in there, a $500 PO there, and no one had the appetite to put more money into the company. So that was the shame. And then I've had some where people just left the country. Really? A few TCA members invested. That one too. She left the country. I'm like, okay, luckily I didn't invest that much. But the idea was great. But I know some people that invested a lot of money and they were pissed. And I'm like, well, does anyone have a contact at the State Department? When she tries to come back over, I mean, it was bad. It was bad. She just left the country. It was, whoa, what happened? And cut off all communication. So not everyone's going to make it.
That's not good fail. That's really bad fail.
Yeah, it was a really bad fail. And then I have another Orange County one. I'm not going to name names. Did kind of the same thing.
Yeah, no names.
Really bad. Not naming names, but it was really bad. And it's like, okay, well, I believe in karma. So unfortunately, people have some bad karma coming their way. But there's great fails, and I've had two that failed really well, and two that failed horribly.
Yeah.
And again, the hard reality is, depending on what your company, what you do, and who your customers are, not everyone's going to survive this, unfortunately.
Yeah, it's tough on a lot of people. Okay, question from Christy again. What is the ratio of deals being done where they never meet management, or are you setting up face-to-face meetings for management and founders with investors?
So for me, like I said, I have 20 to 30 companies coming to me through my network, through fund managers, through LinkedIn, through everywhere. And maybe one I might follow up with. I need warm introductions. Warm introductions I will follow up with, whether they're a fit for my group or not. If I get a warm introduction, someone from JJ, someone that I know, I will always follow up with that company.
Yep.
And learn their story. And I suggest, I always suggest entrepreneurs, even though you're early stage, have that pitch deck together. You're still forming it out. Keep the connection going. I want to follow you through, even though you're pre-seed and you're still working on an MVP, but you have something there, you have some passion. Keep in touch with me. Keep in touch with the angels. You'll get to a point where it's like, okay, look, they really proved it, or they pivoted and now they're in revenue. Come talk to me again. You might be ready to pitch to us. So it's hard to say that ratio, but warm introductions, I will always speak to. I'll always connect and take a Zoom meeting with a warm introduction.
I tell that to everybody, is that if I send you somebody, you're gonna take that call or that email. Mm-hmm. But if you're gonna get 30, 40 LinkedIn requests, who knows, right? Unless it's really, really appealing, it's difficult. Right. So maybe we could talk a little bit about you know, the mistakes you've seen during the past 4 or 5 months. You know, I know we talked about the failed, and you know, some failed bad, some failed good, but what about mistakes that people, you're seeing them and you say, what are you doing?
Yeah, yeah. Well, they're not communicating. I mean, I have one company, they're in revenue, but they just don't want to give us any information. So that's a huge mistake because you might need some help. And if you're not talking to us and you're not letting us know and you're not giving us updates, we can't help you.
Yeah.
So it goes back. That's a huge mistake. Not really strategically talking to your investors about capital moves you're going to do. Like, I'm thinking about, you know, doing this. We have some dry powder. What do you think? You definitely need to reach out to us because we might have some experience with that. We might be able to give some great advice. We might be able to make a key introduction. So that's the biggest mistake I see is they feel like, oh, I failed, or something's not going on now, and they clam up and they don't talk to you. That's probably the number one mistake, and not really knowing their cash flow. If you're not familiar, some people aren't good numbers people. That's okay. Make sure
Right.
someone on your team is, and you understand the cash flow and you're
Or
talking.
hire somebody.
Hire somebody. There's lots of ways to do it where you don't have them. You don't have to have them on the team.
Yeah.
And so those are some big mistakes I see being made.
Wow. That's so, you know, I hear a theme here, Xandra, and the theme is communicate. Like, you don't communicate, you're in trouble with Xandra. So
yeah. And I'm talking something very simple. I don't need a dossier of what you're doing in the background. I give an example to all my portfolio companies. I want monthly, if not monthly, be perfect, a KPI email. The 3 things that are going great, the 3 things you're working on, and the 3 things you need help with. That's all I need to see. And that's great. Then you're communicating with me. I'm feeling good about my investment. You're letting us know what's happening. Here's where we need help. Great. That's all we need. We don't need a big analysis of it. We can, if we have many questions, we'll call you directly and ask, and we can have that discussion. That's the best way to communicate.
Yeah. So this may be difficult to answer because it could mean many different things. What is there a way for all these startups, regardless of what industry, regardless of what stage they're in, to maybe figure out a way to embrace this new COVID-19 and maybe create new realities, new opportunities? It's a difficult
There
question.
are.
Yeah.
Yeah. No, there are. Okay, so you got to look at the industries. Like, I watch CNBC religiously. It's on in my house all the time if I'm sitting in my office. And I mean, it's for my investments, for my portfolio. You know, I have to look at what's going on microeconomics and macroeconomics. So look at, you know, there's cybersecurity, telemedicine, anything that you can do that can drive efficiencies within a company, their workforce. There's so many opportunities out there. You just got to do your research and you'll find it. What's your pain point? That's what I tell entrepreneurs. I'm also an advisor to people that have ideas, and most of the time their ideas there's not a market for it. They didn't do the research, but they have a passion for something. So I tell them, what's a pain point for you in your life? That there could be an opportunity there. In fact, the lady that does my hair, she had to open her salon and then close her salon, and open her salon and close her salon, and go back to her house, like dragging all her stuff back to her house. And she's got clients who are elderly, and she can't go to their house, and they can't like bend or anything like that. And she's like, I can't see my clients, and they want, you know, their hair done like once a week because they can't make it up the stairs to my condo.
Right.
So I said, well, here's a business idea. She goes, what? I go, you need to figure out how to do a portable sink that you could just attach to their sink that's comfortable or whatever. I'm sure they're out there, but you can make it easier. So because you're going to be closing up and moving back to your condo and closing up. So here's an idea. Here's a pain point for you. And it's a pain point for a lot of hairdressers, you know? So it's, you know, that's, I think, the most successful companies come from pain points that the founders, you know, uncovered.
Yeah. Wow. That's actually interesting. All right. So let's hear from Ross a question. We have a very appealing SaaS, over 3 years self-funded, lean, pre-seed with an MVP. Can we contact you directly with deck? Thank you. Ross, you have to be a woman.
No, you don't have to be a woman. Okay. No, we are industry agnostic. Just to let you know about OSea. Our mission is to teach women how to be angel investors. In a perfect world, we'd only see women-founded companies, but that's not where the opportunity is always residing for us. So we want to see passionate founders that have a, they're solving a problem. So yes, you can send me your deck. I will gladly look at it and jump on the phone with you.
Do you want to give your email, or you want to send it to me and I'll send it to you?
You can send it to me, Polly. Joe, okay. Honey, that's great. The cat's peeking out. They can send it to you, and then you can send it to me. That's fine.
All right, no problem. So you could send it, Ross. You could send it to me at PV info, like Pismo Ventures info, PV info at pismoventures.com. So, all right. So here's this. Love the cat in the box.
Yeah.
Yeah, there you go. All right. Start with the why. So I kind of like that, right? Start why you're doing what you're doing, right? So
why you're doing what you're doing, or why? Yeah.
Well, why everybody's doing what they're doing, right?
Right.
So, all right. Maybe this is what we're about 5 minutes away. So what about if I ask you? I'll do some closing. I'll ask you for maybe come up with one advice other than communicating, because you said that clearly.
many times. You're sick of me saying that. Okay.
It's very, very clear. Maybe an advice, either maybe a mistake to avoid, or maybe an advice for them to, when they reach out to investors, what would that be? So let me do some closing. I'll be right back while you think about that, so I'm not throwing a curveball at you directly. So, all right, everyone. I wanted to just say first, thank you, Xandra, and thank you all for being here today. Just a little bit about what we're doing right after this. So if you have not, again, subscribe to our YouTube channel. Please do. Social media as well. Follow us on all the good stuff, LinkedIn and Twitter and Instagram and Facebook. This program will be available by tomorrow morning for you to review. So if you want to go back and listen to this, or maybe share it with your friends, that would be great. So please do so tomorrow morning. It won't be available till then. The other thing is, like I said earlier, if you have any questions or you want to send something to Xandra or myself, please send it to pvinfo@pismoventures.com. We have plenty of new program shows that are coming up. And so next week we have Scott Fox, another TCA angel investor. Also, you know him as the Orange County Startup Council. I'm getting so many calls while I'm talking. And and after that, we have John Harbison, who is TCA Chairman Emeritus. We have also Jay Cormier, who is also one of the TCA members. And also, he's mainly specifically investing in life sciences. We have Barbara Russell from, she's got her own Capital W, it's a venture firm in Boston. And then we have Sierra Angels coming on board the week after that. So really great lineup through the end of August. And then we have some more coming up in September. One last thing I would say is, if you don't know about the venture plan competition that Pismo Ventures is putting on, make sure you go to ventureplancompetition.com. You can't forget that, right? Ventureplancompetition.com and sign up. You don't have to have all your materials in place. You can always submit them before the deadline, but it's early bird registration now, so take advantage of that. All right, Xandra, what is it?
So this is the advice I give to my angels. All of my angels are brand new, and so I guide the due diligence on the deals with them, and this is on their due diligence basics. Number one, the pitch deck has to be finely tuned, and in that, you're going to need to explain to us the problem you're solving. Did you do your research on that problem? Because we're going to grill you on that. The total addressable market and the people doing it. So that's going to have to come out clearly in the pitch deck. So make sure your pitch deck has nice graphics, not real wordy. That's very important. And then that might get you a meeting or a phone call. You need to understand, we need to understand who the team is and their backgrounds. That's very important. So make sure when you're putting that team together, you have complementary skills. And then, just have the passion. just, you have to have the passion. There's a little bit of that magic, a little bit of that luck in there. When I meet someone that drones on and they just aren't passionate, maybe that's not the right person to pitch it. Maybe there's someone better on your team to communicate what you're trying to solve.
Yeah,
So
that's
there's some advice.
That's good. Well, that's really great. So Daniel is asking for your email. So just send me the info, and then I'll forward it to Xandra. And if Xandra wants to get back to you, she will. So that's better that way. All right. Well, Xandra, thank you so much for being here today. That was absolutely amazing. All right. All right. So
thanks, everyone.
I'm sure I will see you other than this or Zoom one day. So until then, stay safe.
Until then. Yes, you too, JJ. Bye, everyone.
Bye, everyone. Thanks for being here. We'll see you next week. Bye-bye.
Bye.